Hello folks, welcome, and this is another session of the learning ICT in public, golden age trader. So over the last few days and the last few weeks, DXY have been showing some interesting behavior, and I think next few days could be more important for dollar direction. Today we're going to break down what happened over the week, and in reference to my previous videos, you can see where we highlighted some trade movements, and yeah. So we're going to be talking about the move, what I think caused the move, and the key levels that I'm watching going forward. So I'm just gonna, my previous analysis, I was expecting DXY to actually come down in here, which we can see price did. Remember I highlighted this as a low. Some sort of it's a resistance, support rather. To me, it's also a liquidity as well. So say side liquidity. So it says liquidity as well, and I wasn't able. This is also liquidity we're looking out for. This is a daily chart. If we go to the weekly, there is something serious we need to watch out for. This has not been thinking. This is also a liquidity. I don't know how I love clearing my chart to give us so we can understand what we're doing, and the steps to take. So this is a liquidity as well. This is liquidity. This is a buy side liquidity. I'm looking for price to take this high, and ultimately we're coming up to this imbalance, this void, this low candle, this bearish low candle. It looks like an imbalance to me. So sorry. So I'm watching price to come up to fill this. So same way it came up to fill all of this, you can see price is coming to fill it up. I'm so expecting price to come fill this up as well. You can see how it took all of these candles. So yeah, it took liquidity, made some, and then we're coming back up. So ultimately, on the view, I am bullish on DXY until we get to this point. I don't know, but because of this inversion fair value gap, so I actually this is from the monthly view. Wanted to see price come up to this point, and then we can see continuous sell or bullish. For me, this is where I'm expecting price to get to. You can see this fair value gap as well, because it took this liquidity here. Liquidity is taken here. Put it up here. Liquidity, price of liquidity was taken here, and then we can see the fair value gap here, the first one and also the second one. Why am I highlighting the second one? Because of there's a fair value gap here as well. The inversion fair value gap, price came back up. You can see we're coming back up into this one, and which is a very good one. Price can still sell from this point, but if we can draw a Fibonacci from this high onto this low, we can see this inversion fair value gap is more like in discount. We need to see, ICT always talk about selling from premium and buying from discount. So if we want to buy this market, it's a discount, it's good to buy it. Where are we going to end our price? In premium. So from this point here to here, we're in premium. From here to here, we're in discount. So what am I going to do? What do I think is going to happen? Obviously, I want to see price push up. Where do I really want to see price push up to? At least get to the equilibrium, and at this point there's a fair value gap here, which I don't know what price will do, but when you get there, we watch. This is a monthly chart, so we'll watch the price go high, as we see in the next month of July. We'll watch the price go high, we'll see what we can do or what we can take. Ultimately, to me, I am wanting to see price get to 104.577, at least at the 0.62% of this Fibonacci, and that is where my inversion fair value gap here rests. This is another fair value gap from this high to this, from this low to the high of this candle. So my price, I really want to see price come into this area before we see the continuous sales, on DXY. So for the next few months or the next few weeks, we're seeing buy up to this point. When DXY buys, you can see other pairs like the GU, EU, gold, and some other pairs, Nasdaq as well, S&P 500, they sell. They move relatively opposite each other. So when there's a monthly, so we come to the daily, we can see this is also a liquidity for me. We can call this a support, so a resistance level, resistance, plus buy side liquidity. Sorry. So what can I say here? So this is a daily chart, so we can see this is a high as well. This was a liquidity that was taken. Yeah, this is a liquidity that was taken. Let's go to buy side liquidity. I draw a lot of rubbish on my charts, so if you don't get it, it's fine, but this is what I see. I'm just trying to pinpoint where I see what I see, and so this is also another fair value gap I can see, and we can see this long imbalance here, this very big candle. So this is another point to actually watch and see price come down to. So the last time I was uncomfortable to draw the high here of my Fibonacci because of my Fib rather, because this was Thursday, and I was uncomfortable to draw the high because this candle hasn't fully formed. Now we can see this candle formed and this one already. So, and you can see he dipped down into this fair value gap and rested above it. Now this is tricky because if he had closed below the fair value gap, then I'll be confident about moving down to these points, to the equilibrium of this range. Well, it's tricky. It's closed above the fair value gap, so I don't know yet. We can see price to take out this liquidity and this one as well, creating some sort of a futuristic breaking structure to come back down to discount, and they will continue buying. Well, anything can happen in the markets. All you need to do is trade accordingly to time and price. Well, this is just a review. Now this is the daily charts. Let's go down to what happened on Friday. I didn't trade on Friday. I was at work, so I was unable to do what. Okay, let me get this. So I was able to do anything at all. So this is the high of Friday. This is the low. There's no point, no need at all. I just wanted to get the high, so that when we go down to the 1 hour, we can get to know where price started from. And this is the low of Thursday. Alright, this is the low of Thursday. Price didn't take out the high of Wednesday. and which means this is a very good swing, price swing. So definitely we got down movement into the fair value gap on the Thursday, and then price again tested the fair value gap on the Friday. Now what happened on Friday on 1 hour chart? So this is the beginning of it. This is Thursday. Yeah, Thursday. We can see the opening of. This is the midnight Friday, and then we can see the 6 a.m. opening Thursday. So the midnight Friday, as we can see, I took the wrong one, sorry. This is the midnight Friday. Right. And the opening of the New York 6 a.m. This is opening of the New York session 6 a.m. So you can see what price did. Took liquidity here, right? Took liquidity here and then sold off, creating this, sold off, took liquidity here, sold off into the fair value gap. And where was the reference point? Coming back down, you can see another block here as well. So what I like to do sometimes, I like to go down to lower time frame to get the reason why price moved all this way down and respected some set of some form of reference point and all that. So we'll go down to lower time frame, we'll get to see. So just want to let's get this. So this is the opening and midnight. I really don't want to put anything. Okay, let me just midnight. Midnight open. NY open. If the midnight is mostly the London session, so I'll go down to lower time frame. We'll get to see what price did. So this is the midnight. Obviously down to this point 6 a.m. you see that it's taking liquidity here at this point. Liquidity was the best, sell side liquidity was taken. So all of this happened in the London session. Why didn't price come up here? Why did price come up here to take liquidity whatsoever? Because I really do not want to see this high taken until I really want to see a deep premium of a deep discount of price. All of these continuous sales for a while just to get a good deep premium. This is the second fair value gap I highlighted in the daily. You can see it. If it gets to that point, let's go back to the daily chart. I'm sorry, I'm reversing it back. If it gets to this point, we can see that we're at least in the equilibrium. So I won't mind for price to come down here and then we'll continue buying. But then it's already made its mark, took respected this high, which is, you can point out here, it came, all of this, when it took this high, came back down, traded here, and it's going back up. Do I really think or sense any given any reason why price should go up? No, because right here, when you broke this liquidity, this sell-side liquidity, you can see you formed a fair value gap here, right? One could think, okay, if you want to buy, you can see it came up here into the fair value gap and it sold. down to a reference point here, and now it traded back up, gave a big imbalance. All of this I really want to see it fill up, in the future. Came back down. You can see here this bullish candle signifies what I call another block as well. We all know what other block is, and price is respecting it. And if price has closed above it, on Friday, then I will definitely be seeing and waiting to understand what the midnight open will do, the London session in New York time, and then watch to see price really go up. Price can, at this point in time, price can do anything. Can go up, can continue going down. But really, what do I want to see price do? I want to see price go down at least to the equilibrium of the range, which is around the second fair value gap. Let me take this out. Alright, so the mean, go back to 15 minutes time frame, going to show me key zones. So now when price open, how would one have traded this? When price open like this, we'll get to watch and see for key zone. Now let's understand what happened here. All of this is the 930. What happened here and why the price really respect this point. You can see here, when you see series of down candle or series of bullish candle, just know that those are other blocks in higher time frames. Now you can see from this point here, 1, 2, 3, you can see all of these are other blocks. If I highlight it, and let's see in right, go to the 1 hour. It's actually this candle, sorry. You can see this as another block. For what? For price to do what to expect, because this is a candle that price took, broke liquidity here and here as well. So the 15 minutes, one of the reasons what I see why price respected this is this movement. Now let's show you something. Let's discuss something here. You can see this high here, right? This is more like a liquidity. There is another block, is also a liquidity. You can see that when this candle, this bullish candlestick broke this high, right? You can see all it did when it came back down, this from here to here is, we can call this a fair value gap. Price traded back down and continued buying, came back down, respected it, because when this candlestick blew up this high as well, you can go back to lower time frame like 5 minutes, we can understand it much better there. You can see price, you can see this form, there's a new order block where price traded back down, respected the order block, and it traded back up. This as well, you can see it's a down candle, traded up, broke the high, took liquidity, came back down, respected it as another block, same way, same thing, right? So you can see it's happening and occurring during charts. Now I can identify this as a good point for price to trade into. If I was to trade this particular pair from this point here, when it took liquidity, let's say in the London session, right, took liquidity here, traded back up here, and came back down. If I did enter the market from this point, I will be highlighting coming back to this particular point here and watch price. We can see here is a fair value gap here. Here also, though it's a series of other block, is also an inversion fair value gap as well. You can also draw price. We definitely want to respect that and hold on to it. And now which it did. So here would definitely would have been my TP, because we are actually in the daily fair value gap, and I won't mind. But if price are closed below it, all of these features happening here, happen down below this fair value gap, then it will really confirm my bearishness in the market. But for now, it's 50-50, because we are in premium of the whole range, we are still in premium. So I want to see a good discount. So price coming up here is fine and okay. What I can see price expecting as well here is this other block, because this is a liquidity zone. Other block, price broke it, took liquidity, came back up, traded into it, fair value gap, and then came back down. So this to me is very respectful, and I want to see price respect it. But what, hey, I'm not the owner of the market. Price could as well come up. Sorry, price could as well come up, because this is the midnight open. Obviously, it's the high of the candlestick, the daily candlestick is the high of it. Price can come into this particular point here. We'll have a fair value gap here. We'll have a fair value gap here. I definitely will want to see price come up here a little bit. Then we'll continue selling. And why do I say that? Because if you draw your fib from this high to this low, we are definitely in premium, but it's fair enough to get up to this point. At this point, I identify this point as the OTE. ICT would say is optimal trade entry. So yeah, I would love to see price come up to this point and then we sell. So what am I seeing in the market for next week? The fair value gap here, a movement for price. This is not a signal, please. I just want to see what's happened. I don't see what happened and what will happen next week. In the Monday open, we can see price to get up to this point and then we sell, which means on the daily we're still going to be bearish. I'm bearish on DXY this new week, and these are the reasons. Otherwise, my daily bias is wrong. Then we can watch to see what price gives to us. So the reason for that expectation was liquidity and imbalance happening all around the market, and also higher time frame buyers. What's actually happened was slightly different, but if I was to trade in London session, in my little Telegram group where I have we're just 4 or 5 in it, just 4 or 5 traders, including my younger brother as well. We can see it took a trade when DXY it took a trade in the London session, which was against our rule, because we normally trade the New York session. We normally trade the New York session, but he did trade the London session because he saw this opening. He saw this particular fair value gap, and I saw it as well, but I wasn't interested though, and also because I was at work, so I really won't have time to monitor the chart. And also when I was looking at the market, then I saw this and I saw this as well, and I pointed that this is going to be the point where mostly the TP. I actually took the high of this, my TP, and how would I have entered this trade? No much. Should I this trade from here? High of this, I'll put it here just to be safe. And my TP was here. This is good. 1 to ratio 2 point something to 2.5 or something. So yeah, very good. It would have been a very good trade. And my younger brother took the trade on EU, I guess, and he bought EU when DXY was selling. So this is a very good idea, right? It's a very good situation, a very good market entry. Got a very good. He wasn't really that confident in it, but it did happen. So if we look at the market structure here, you can see that the price moved into this area before reacting, took liquidity, moved back up, and then it reacted back down. You can see it came here. Obviously, if you look at it to your left, you will see a reason why it respected, took here, respected here, lower time frame as well, we're going to see that came back up into this fair value gap and it took this low. So all we need to do is to watch out for liquidity sweep. When that occurs and your direction and it's around your key zone, time and price, obviously this is around the London key zone. We have London session, the Asian sessions and the New York session. This is around the London key zone. Price went back down, price went down, took liquidity here, from the fair value gap, went back up, entered the trade. Like I said, I would have bought from here. If I had missed this, what would I have done? Was stay in the key zone, right? Around this point, we're out of it. This is the London opening. We're out of New York opening. We're out of London key zone. But what would I have waited for just to see what happened? This is the London key zone. Definitely, we can see it has traded all the way down. So we just have to wait to see what happens here. Get price to get down here. This is the reference point. We can see it's trading back down here. And what happened? Traded back up into this fair value gap when it took this side liquidity and it sold during the London keys, New York key zone opening. That's New York session opening. The key zone traded back down in here. So right, so how can we get on this trade as a London session to New York session trader? One thing I know about charts like this, this was a favorable day for the London session. The New York session didn't really give much during the key zone, right? It didn't give much at all during the key zone. Some people would have entered, okay, but waited for it to come here. Some good experts, pros, would wait for the 9:30, like I told you earlier. I always trade in New York key zone from 7:30 to 9:30. Give me a good opportunity for buys. Now this happened. This is 9:30. You can get into the charts. Here, one can trade this if I were to trade the London session, but I will be so skeptical in entering this trade because we just reached a reference point, and I will be so very, very scared to trade something like this. Some people who are so good will definitely take the trade like this immediately, but when I see what I learned from ICT here, when you see price get to a reference point, you wait for price to give you and tell you what it wants to do before you go in. Now key zone 9:30, price entered into this area. We can watch what price did. Let's circle in here. Sorry. Oh yeah, at this point. So we can go to lower time frame to look for good entry into the market. Now, this happened. How would one have traded this? This is a 15 minutes time frame. To me, when this happened, this is where I'll be watching price to give me a break in structure. A break in structure. All of this happening here is consolidation. You can see price came when price. What's the direction of markets? Consolidation, expansion, reversal, consolidation, expansion, reversal, and all of that happening. You can see what it did. It expanded. It consolidated here, manipulation. It expanded down. What happened? What's happening here? Consolidation. Why? Because it hits a good reference point. It did here. You can see then it consolidated, did a little bit of manipulation, and then it expanded downwards. And so you can see what market did here as well, getting to the reference point at this area, hitting my TP definitely from the London session. What would I do next? since we're the New York key zone, the New York session, and we're in the key zone, what will I do next? Watch out for price, because I won't really get into price action or get into the trade, because we're in the New York kill zone and we just want to see price move to, yes, we can get our buyers to be like a little bit bullish to the point here, but how will you safely go into the market? I will safely go into the market when I see a setup. So this is where you get to understand ICT basic 2022 model entry. To me here is like according to breaking market structure, BMS. I would love to see this taken first. There is also one here as well, but you know, this is a good imbalance here. Until I see price close above this, then I'll wait for a retracement back down, and then I can buy. This whole big long imbalance, you can see that there is no fair value gap given here. This high was taken, and when it did, you can see it created a fair value gap. So I would definitely must have waited and bought in this fair value gap if I was to trade the New York session. This was a very tricky market, so when I saw it, I ignored. I didn't really take it serious. I didn't take it serious at all. So yeah, this is where I definitely would have bought the markets. I would have went long here, not down here. I would have went long here because we traded into. But though now this is definitely very low probability. One would have loved to, sorry, let me not like this, because if I want to go into this trade, I go in with a lower time frame. Hold on, sorry. So I would have definitely taken the market from this point. You know, where will I get to? First of all, the only thing I can see here is this, because here when price came up here, you can see it traded into this fair value gap. We expected it traded back down into this fair value gap as well. Traded back up. What will be my next reference point? There's an order block here and also a fair value gap here. So this would have been my TP. Around this zone would have been area of interest to get out of the market. I don't trade a stingy market or a greedy market. This is the area of right up to this order block, definitely. Now, how would I have gotten into the market? Let's see around this point. Let's take all of this out. I'm just trying to this is a good entry point, but because I'm a new trader, I don't want to be losing my money, because what did he do? This is the 930. You can see it came back down. Imagine entering at this point and you're seeing your trade coming back down. You know, the kind of uncertainty and the very demanding idea. Sorry, excuse me. So how would I have entered the market? You can see the breaking structure here. Liquidity here was taken. This is breaking structure plus plus the buy side liquidity as well. When this happened, definitely I'll be waiting, I'll be watching. Now this is 10 a.m. so if you miss the New York Open, New York key zone rather, from 7:30 to 9:30, you wait for price to give you a good view. You can come in again and check mid morning around 10:30 to 11:30 a.m. because price is going to give you a good view before the New York afternoon session. Now you can see price. This is the 10 price spot up to this point, took liquidity. This could have also sent price downward. This is a long void. You can see it's a long imbalance, a long void as well. Imbalance void, anyone to use. this can easily send price downward. So what can we do at this point? We get to see, sorry, I'm getting a call at the moment. Yeah, hello. Yes, ma'am. Yes. Oh, it's far. Zamzam, I'm sure. Yes. Okay then, no problem. That's closer. Okay, ma'am. Okay, ma'am. Thank you. Oh, okay. Okay, ma'am. Oh. Sorry, I just had a call. So we can see price did its thing, came back up. So yeah, price came back down. This is where I definitely would have entered the market. At this point, this is a good entry. We can also go down to 3 minutes. This is a very good point. Seeing here is another block as well. Really do not want to see price go below this. So because this is the last dark candle that happened that broke this high, so definitely we don't want to see price go below this. And if you trade back into this, you can see there's something I want to show here. We can take from this low to this high. This is a fair value gap here, right? And this is in the premium side. You can see price would have actually really bought from this point when it came down here and just buy up to this point. But you see, it came into discount. You can never buy from premium. Try always to buy from discount. If you're buying from premium, definitely your range is wrong. You can see at this your range, how you join your range, how you put in your Fibonacci is wrong. So you have to look for price to give you a good premium. I can using this low here. Why some people will ask, why didn't you use this low? I can't use this low because this is the last dark candle. This high was taken. So yeah, from this, definitely when this high was taken, I have to use this low because it's the last down candle that occurred, the last down movement that occurred that made price. You can see all of this movement, then the positive movement took this high. So definitely I'm going to be referencing this low, and you see price coming back down into this fair value gap here. There's an OB here, so this is a good zone for a good buy. So definitely I would have bought from this actual point anywhere around here. And you can see here is O2. So if I draw my fib and I'm seeing a situation like this, I definitely would have always buy from the 0.62%. So this is where definitely I would have bought the market from. And always put your stop loss at the low. I'm just gonna put it here. I don't mind because I don't really see price coming by here. This is another block. We don't really want to see price come all the way down here. And where will be my TP, like I highlighted earlier, around this point, the fair value gap up here, if I traded this. So you can see another 1:2. Easy pickup. Now some people would I'm not really a professional trader yet, so this is definitely what I can see and what I expect price to do, the movement, everything at all. So at the moment I'm not focused on predicting exactly where price will go. I'm just interested in identifying areas where the market is likely to make a decision. So around this point, this area here, you can see there's a fair value gap here. If I want to trade this at all, you can see movement down here and they will buy up. So definitely that's how I would have traded my move on Friday New York session. waited for it to get to this point, and they will buy. Some people, 9:30, they don't get to see anything and they leave. Just have to wait, just watch. Though I don't like sitting on the screen for hours, but when I get into a trade, I don't like sitting for hours. I can sit hours waiting for setup to occur, but when I get on the trade, you can see this happened around 11. TP got hit around 3. This is a long ass hour, but it's all good. You got a TP hit. You can also trade from here to this high, lower time frame, get your framework ready to this high. The liquidity, take a partial here, leave your stop loss to at this point or anywhere here, and you see price, you didn't come back down here anymore. So yeah, basically that is it. So my current buyers remain bearish on DXY, on the daily remain bearish on DXY, until I see price get to equilibrium or at this fair value gap. Then yeah, that is it. If DXY can hold on and not to pass this high, then yeah, I think there's a reasonable chance we'll continue the liquidity pull down here, down to this point here. That will support further downside movements. Not taking this high will support further downside movement. And however, if price fails to hold the trade and go through this level, then my bearish idea becomes weaker. So just want to see price take all of this liquidity here, and then we'll see downside movement in the future. So that is how I see the market. So I'm still learning and documenting the process publicly, so this isn't a financial advice or signal. It's just where I see the market getting to the point. The goal is to improve my understanding and review these ideas over time to see where I got it right and got it wrong. So these are my thoughts on DXY, and in the coming days, if you're studying the market structure, liquidity concept, let me know what you're seeing on the chart as well. We'll review analysis in the next video as time goes on. And now the edge isn't found overnight, it's built trade by trade. Till next time, have a good day, have a good time. Thank you very much.